welcome. We have with us a very special guest, a company that's been quarter on quarter performing well and, of course, delivering stable earnings is Castrol India. This time around, while the top line looks good, there has been a little bit of contraction on margins. But we have with us Mr. Bakshi, who joins in to talk to us about the quarter gone by and giving us a sense of what lies ahead in FY25. Mr. Bakshi, thank you very much for joining us today on the show. It's great to have you on NDTV Profit. Mr. Bakshi, give us some color about the quarter that's gone by. Your net profit is up nearly 7%. What are the factors that led to that? Apparently, and also the sense that we get is revenue is muted and margins have contracted a little bit. So wrap that up for us, and also tell us what lies ahead for FY25 in terms of a guidance.
Amina, thank you very much for having me on your channel. It's a pleasure talking to you. I think it was a resilient quarter, and the quarter started with a bit of a slowness in the consumer demand, but February and March we did pretty well, as a result of which we managed to grow volume above the market levels. The margin range that we give a guidance is around 22% to 25%, and we have been in that range for a while consistently. This quarter we delivered about 22% as well. We put a lot of actions in the marketplace. We've been continuously investing in our brands. We signed up with Shah Rukh Khan, who's going to be our brand ambassador. We're also investing in being performance partner with MI Indian, which is the IPL team, and KTM Cup. So overall, with all of this and new products, rest of the year looks good as well.
That's exciting. In terms of what you had guided for on the margin front was about 23 to 26%. Margins have been lower than that. Now, is this a one-off as we go into FY25? Do you think the range of 23% to 26% still stands for Castrol?
I think it will. This quarter, basically, there has been volatility in the crude price as well, and crude is our key input in terms of our raw material. And as I said, the year started a bit slow in terms of the consumer demand. So we think we will still continue with that margin. We're not giving any other margin as yet. So yeah, that range is something that we will aim to get and deliver.
Right. Fingers crossed on that one, Mr. Bakshi. Also, give me a sense of raw material. You alluded to that just a little bit in this question, but elaborate on that. What does the environment look like? Do you feel like there could be some more upside risk on raw material prices going ahead, which could then potentially impact margins? So a lot of that is already hedged in that sense.
So look, I think crude price is expected to go up slightly than what it was in 1Q. I would also like to share that, because we import crude, there is a foreign exchange impact that comes onto our input prices as well overall. So of course, that is something that we have to deal with. But we've been doing this for a while. We have pricing models in place, and we continuously look to add value to our consumers. And if the pricing in terms of the input cost goes above a particular band, then we take pricing in the market as well. So from that point of view, I think we should be able to manage the EBITDA margins. At the same time, I think our focus is on to grow volumes. We have taken several initiatives to grow volumes, including expanding our workshops, which are the independent workshops, both in cars and bikes. And we also recently went into diversification on products like auto care. So that's doing well as well.
Right. So Bakshi, you talked about how your focus is going to be on top line. And give me a sense of that. You've talked about products as well that you've been launching. Any new products that are expected or that we can expect from the Castrol stable in FY25?
Certainly. I think firstly, we would be launching a product into personal mobility. And, this is in line with our principle of both protecting the engines as well as, looking at how we can give a performance delivery at the high end. So that's something that we will do. We will also looking at technological advancement continuously. So there will be products in that range. And most importantly, on electric vehicles, we launched a few products last year in fourth quarter. So we will continue to expand on those products as we respond to the electric vehicles opportunity that is in the market.
And all this revenue increase that the company is currently focusing on will not come in at the price of profitability, right? So you won't let go of your margins to build revenues.
No, I mean look, I think it is ultimately a trade-off, and it is cost benefit, and lots of factors play into the whole dynamics. But having said that, we're saying we'll be in that margin of 22, 23 to 26%, the guidance that we have given. So yeah, I mean that's the range. I think we need that elbow room mainly because with the sensitivity of the crude price, there is always a lag in terms of your response. Yeah, by the time the consumers get the product and by the time we get the imports in. So therefore, that lag should be looked at it more from a point of view of the margin growth within a band over a period of time as opposed to just one quarter. And therefore, this quarter is not really a question of worry for us.
I do know that you'll have launched Castrol ON that helps improve performance of EVs, and that's the space that you talked about as well, that you're making investments in. How significant will this be, say, over the next couple of years in terms of top-line contribution? And is this a good, profitable business to get into, or are you just taking a leap from your customers where they are in the business and hence you have no choice but to venture into it?
I think there are various threats to responding to the EV opportunity, if I would say. Firstly, the Castrol ON product, or the products that help electric vehicles. I mean, these are coolants, transmission fluids, greases, etc. We have almost top 3 or 4 OEMs in India to whom we supply these products. Yeah, currently the volumes of these products is small, but as the EV sort of segment starts growing, I think we'll be able to supply more, and it will contribute to the top line. But currently, I would say this is a small, insignificant part of our top line. The second part of the EV is really around battery management, thermal fluids, thermal management, and there is a lot of research that is going on globally. We invested about 50 million pounds in our R&D center in UK. And an offshoot of that, there are use cases being worked for opportunity in data center and data center fluids. So I think there is a lot of work that is happening, and the technology of EV fluids in India and electric vehicles in India is fast evolving. And therefore, we are far ahead in terms of our products, given that we've launched products in other parts of the world as well. For example, China, Western markets. So the learnings from there will be brought into India very easily, and we have that global advantage as well. So we look pretty positive around the response on EV plans.
Right. Subakshi, what is capacity utilization standard, and what are your capex plans for FY25? Are you looking to make more investments? And if you can quantify that for us, it'd be useful.
Yeah, sure. So capacity is about 80-85% utilization. And in terms of the capex plan, look, I think we will spend about anything between 100 to 150 crores. And this capex is, I'm talking about the organic capex. And as we grow into the market, and we want to make investments, for example, in rural, yeah, we've had a new route to market, and where we are going to be investing into rural. I think that's one area where the capex is going to grow.
Oh, well, congratulations, Mr. Bakshi, and good luck. Hopefully FY25 turns out to be a profitable one for the company, and we'll hopefully catch you soon.
Thank you so much.
Thank you very much, Mr. Bakshi.